crypto spring obviously comes after winter, and it's after all the terrible news comes out. If you introduce spot Bitcoin and spot ETFs into a rising market, you will start to suck in the investment advisors, the individuals who found it too complicated to hold their own wallets and do all of that kind of stuff. If you want Ethereum to be worth $5 trillion, well, then you're going to need the finance system to use Ethereum for settlements and smart contracts and everything else.
Macro expert Raoul opened up about the current state of the cryptocurrency market. In an interview with Coin Bureau Clips, he highlighted that 2022 witnessed a correction, with crypto markets plummeting by as much as 80%. The crypto markets have entered the final quarter, which has been bullish historically. The traders also appear to be optimistic about the upcoming price action. Besides, the current price trend displays a contrasting picture as the Bitcoin price continues its struggle to reach $28,000. Although the trend has remained ascending, market experts believe a notable retracement could also hinder the progress of the rally. Powell expressed his optimism, referring to the current state of the crypto market as crypto spring. When asked to define crypto spring, Powell likened it to a season of unpredictable weather, with periods of ups and downs. However, he emphasized that the market tends to trend upward over time. The SEC has been under intense pressure to approve the various applications of spot Bitcoin ETFs it has received in the past few months. Recently, a few U.S. senators voiced their opinions on the subject, pleading with the SEC to approve the applications as soon as possible. Many analysts have spoken about a predicted and early 2024 timeline for the SEC's approval of the ETFs. Bitcoin could see an influx of up to $17.7 trillion from institutional investors as a former BlackRock manager predicts the imminent approval of spot Bitcoin ETFs in the U.S. According to Powell, the reason these ETFs are facing rejection isn't arbitrary, it's actually because a specific component related to either the CME or the CFTC needs approval and finalization. Now, let's direct our attention towards the few clips from interview.
Crypto spring obviously comes after winter, and it's after all the terrible news comes out. And if you think of spring in terms of weather, one day it can snow, then it can rain, then it could be sunny, then it could be warm, then it could be cold again. It's kind of a weird time. But over spring, generally the weather gets better. And that's what we see in crypto. So you get still bad news stories, but the market doesn't trade as badly around them. It tends to go up over time, but it's a bit frustrating because it trades sideways for long periods of time, and then suddenly it goes up in 2 days and then goes sideways and then corrects again, that kind of thing. And that's the environment we've been in. But if you actually step away, if I look at my screen now, Bitcoin's up 72%, ETH's up 45%, and Solana's up 140%. So actually, it's been a good year, just hasn't felt that way yet. From what I understand, they're not getting rejected for no reason. They're actually getting rejected because I think it's either the CME or the CFTC needs to have some component part, and that part needs to be approved and finalized. And it's actually just that. So it's not like, oh, Gary's trying to slow the whole thing down. There's actually one of the component parts of all of these ETFs that require the kind of validation. I think it's from the CME or the CFTC. I'm not sure which one. Probably the CME. That bit needs to come into place. So they're just buying time to get that done. So I still think it happens this year.
This year. Okay, awesome. And how are you expecting that to impact the markets? Is that going to be one of these catalysts that move us over from spring into summer?
It depends what price is doing. Because had we launched a spot ETF in November last year, nobody would have bought it because the market was going down or it was feeling terrible. But as the market is recovering and we're in spring, and normally the Q4 is a strong quarter, if you introduce spot Bitcoin and spot ETFs into a rising market, you will start to suck in the investment advisors, the individuals who found it too complicated to hold their own wallets and do all of that kind of stuff. So it really depends what the market is doing. But I think on balance, it's positive. But really, it'll show up in 2024, 2025 when the cycle's fully underway. It just makes an easy way for people who are not used to the digital side of things to just use equities and get their exposure. So yeah, look, overall, longer term, it's very positive. It's just yet another on-ramp. Short term depends what the price is doing. The price is strong, we'll get a bit of a panic in from the investment advisors and stuff like that.
In the dynamic landscape of financial innovation, security tokens are emerging as pivotal instruments. The asset management arm of Swiss banking giant UBS has launched a tokenized investment fund on Ethereum. According to a recent report by the Bank of International Settlements, tokenization has the potential to significantly enhance efficiency and transparency in financial markets. Based on Powell's analysis, roughly $62 billion was invested in VC projects between 2020 and 2022. These funds are actively fueling the efforts of numerous entrepreneurs who are creating fresh applications and opportunities in various fields. Ether made its ETF debut with the release of 6 different futures products on previous Monday. On the same day, crypto asset manager Grayscale has filed an application with the US SEC to convert its Ethereum trust to a spot Ethereum ETF. In the interview, Powell suggests that a futures ETF has a relatively minor impact on the cryptocurrency ecosystem when compared to an authentic spot Ethereum ETF. Now, let's direct our attention towards the few clips from interview.
If you think of crypto as an economy, it needs money coming into the economy, right? Because it can't just be us retail lot, because we've all got our money in the economy. It needs to get new money. So that's why it's part of this global liquidity cycle. So when people get liquidity, they start investing in riskier assets like crypto, and it starts flowing in. So that adds liquidity to the market overall, which means that new projects get more traction, and it filters through the whole ecosystem. So money, like in any economy, this digital economy needs capital coming in. So that's what the institutions bring, but the institutions are also building on top of this. Everybody from Fidelity to Franklin Templeton to, I think it's Apollo. Somebody else announced today that I think it's UBS are building a mutual fund on Ethereum, tokenizing it. So what they're going to bring is use cases. And the finance system is the largest use case of all because it's vast. So that's another thing. Also, the institutions tend to invest in VC, so they're funding the new wave of projects. So if we think about it, about 62 billion went into VC investments in 2020 and 2021 and 2022, or 2020, 2021. That money got put to work by thousands of entrepreneurs who are building new applications, new opportunities. And that's what the space needs as well, because we've got this great technology, but technology is not enough. It needs to get to user level. What applications can we use where we don't even see that we're using crypto? So that's why institutions are really important. Also, it's important because things like ETFs allow investment advisors to allocate people's money. So it's not just like Goldman Sachs putting money in. It's actually all of our money, our savings and investments and that kind of thing. So it allows people to participate in this in ways that they couldn't participate before, because it was harder for them via investment advisors or financial advisors to actually access tokens. But this, when it's an ETF, they've turned it into an equity, essentially. A futures ETF has less impact on the ecosystem than actual spot Ethereum ETF. So therefore, we just want to give something back to the spot market, because don't forget, if people are actually buying Ethereum and they were staking it and doing all of this stuff in spot, you've got a much more impact in the space. Because futures, yes, the arbitrageurs will try and keep the price in line. So it does create demand for actual Ethereum, but not necessarily as much demand because people can just trade the futures themselves. So I think the VanEck team are really trying to do the right thing. And listen, it's bigger than all of us. And we need to allow others to participate and help shape it. If people want their bags to go up, well, they want the institutions to build in this space too. If you want Ethereum to be worth $5 trillion, well, then you're going to need the finance system to use Ethereum for settlements and smart contracts and everything else to get there. So yeah, it's a good thing.
The Ether to Bitcoin price ratio dropped to a fresh 15-month low this week, confounding at least some who expected excitement around the Monday launch of futures-based Ether exchange-traded funds to generate buying interest. While the regulatory landscape surrounding crypto spot ETFs presents a significant array of challenges and risks, the approval process for these financial products is complex, creating an air of uncertainty for investors. That wraps up our discussion for today. Feel free to share your thoughts in the comment section below. If you find this content informative, do not forget to give a thumbs up and hit the subscribe button for latest updates. Thanks for joining us.